All right, so you may have seen Trump's tax returns have been unearthed from somewhere, somehow, and there's a lot of news stories about this. So we're going to unpack what's going on with this. This is not a political conversation. This is just more around the tax portion of it, the factual nature of it, or what we believe to be the facts of this, and kind of how would this impact other business owners and things of that nature. So what I have with me now is Natalie Rasmussen from our team at Green Growth CPAs. Anything we talk about is not guidance or advice, tax advice, legal advice, business advice in any manner or whatsoever. This is just a discussion about some of the facts and thoughts around what has happened over the past 48 hours. And if you see this many, many other days later. So let's just go ahead and hop into what we're talking about here, Natalie.
Sure. So as we've all pretty much seen right now, uh, you know, President Trump has only paid about $750 in personal income taxes. Now, his camp is saying, well, that's not true. He has paid millions in other taxes. But what we're talking about is when we file our individual income taxes, that number does not include, say you're a business owner, and it doesn't include the taxes that you pay for your payroll taxes. It doesn't include any maybe sort of excise taxes that you pay. Everything that sort of flows through to you or that you pay personally or that you report personally on your income tax return for any given year, you come up with a number, your income, you have your income, and then you have your deductions, and then you come up with this taxable income number, and that's what you pay tax on. And President Trump has been able to use current tax law, legal tax law, to sidestep a lot of tax liability and pay a small amount of tax. And a lot of people don't understand it. They may have heard, William Buffett has very famously said, my secretary pays more in tax than I do. And people don't understand that concept. And what he basically means is that when you are a higher level income person, maybe a lot of your income or most of your income is not wages. It may be investment income. And the current tax structure as it's set up is that if you have investment income, depending on what type of investment income that is, it's taxed at a much lower tax rate than, say, what your marginal tax rate could be. So you may be a millionaire and you're in the top tax rate, maybe say on wages, but you have a lot of investment income, and maybe that's only being taxed at 20%. And that's what he means, is that his secretary, who probably only has wages, maybe only has some self-employment income or something like that, is taxed at a much higher rate, per, whatever her tax bracket is. Does that make sense?
Yeah, it makes sense. The type of income is very, very important in determining at which rate it's taxed, as well as it's not just the gross amount of income. There's going to be an adjustments throughout with deductions to get you to an adjusted gross income, which is then taxed, correct?
Mm-hmm.
Okay, cool.
So in reading the New York Times article, I'm not going to go point by point, and if you certainly have any questions, please ask. But what it looks like he was able to use, like I said, very legal tax strategies to offset any tax liability. He has paid tax in prior years, but there's something called what's a net operating loss. And so if you have businesses, you have maybe a business that's making money and you have another business that's losing money, essentially it kind of goes to the same place and it offsets. So you can like take this income and with this loss and just sort of wipe everything out. And up until ironically enough, 2018 Trump tax plan, and this came into play, let's say in 2008 during the Great Recession, when real estate was going under, it was horrible. You had a company, let's say you have a construction company, and you have been paying taxes and making a lot of money and paying a lot of taxes all the way through. And construction, and I live in Las Vegas, and construction was one of those industries that was tremendously hit hard. All of a sudden construction dries up, right? So you paid, like, let's say $1 million in tax here, $1 million in tax, $1 million in tax, and all of a sudden you have, a $300,000 loss, let's just say, on your business. You could take that loss and you could make a choice. You could say, okay, I think I'm going to make money in future years, so I'm going to take that loss and offset income, future income, or you could take that loss and go back and get back some of that tax that you've already paid.
Mm.
So what he was doing is that he had these giant losses, and he was able to take it back, and offset income that he had paid. And I think, and please forgive me if I don't have the facts right, but one of his businesses had like $1 billion loss. And he was able to take that loss and take it forward, and it offset future income and you're allowed to take that loss until it's used up for 20 years. So he took that $1 billion loss. How he got to that loss is another story, but he took that $1 billion loss and offset income for 18 years forward.
Gotcha. Okay, that makes sense. That makes sense. And so this was something, as you said, I think you kind of danced around us a little bit. When the housing market crashed and like the Great Recession happened, there was an incentive plan or some kind of stimulus plan or changes to the tax law that made this carry backwards type of thing possible, right? Is that what we talked about in our team meeting this morning?
Mm-hmm.
Essentially, that he was able to build up so much losses in 1 year that was specific for that tax that he was able to take it back and then create kind of a surplus in his taxable income, or sorry, in his tax payments, and then got a refund from that. That's like the $73 million.
Correct. So, and there's always mechanisms that you can do. You can push income into a year, you can push expenses into another year. So, you're always working to see what do you want your year to look like? Do you want it to be a high income year, a low income year? And there's always some things that you can do to sort of push, not accept income until the next year, whatever. But so there was such a large loss that he was able to can go back 3 years, get back all of that income tax that you had paid in. And if there's still any left over, then whatever left over can still go forward.
Mm. Got you. So it sounds like tax planning, aside from just doing your taxes and filing your taxes, planning how you want your year to shake out,
Mm-hmm.
especially when there's a little bit of predictability in your income, whether that's wages, investment income, rental income, potentially a business that's maybe you're an LLC member and you're going to be, 50% of the profit's going to flow over to you.
Mm-hmm.
Planning seems just as important as filing. Can you help me understand a few aspects of planning for cannabis businesses that they should think about that maybe they could apply when they look at their full year in totality? It's like, all right, well, let's go for an example of a business that's been around for 3 years and it has a consistent growth rate. It's nothing parabolic, but there's a consistent maybe 20 or 30% growth every year. What are
Mm-hmm.
some planning tips or things that these business owners should think about?
Well, and you're never going to know what the tax rate is going to be from year to year. We have an idea, but there could be a giant shakeup in Congress this year. So we don't know if tax rates are going to change dramatically, if they're going to go down or if they're going to go up. So we always sort of know that at least for the next couple of years, we kind of know what that tax rate is going to be. We know that, especially with COVID, there was some emergency legislation that was enacted because going back to Trump's taxes and his what we call his net operating losses, as of 2018, if you had a net operating loss, you could then only go forward. That mechanism to go backwards, if you wanted to, was gone. So he only said let's just go forward from now on. Well, because of COVID and the CARES Act, they're saying, well, everybody's going to have losses this year. It's just been wildfires and COVID and everything's shut down. There's probably going to be a loss. We're going to allow you to go back. And for this year, you can go back 2 years if you need to, or you can go forward. So we want to take a look at, what do you think your income is going to be? Are you still in a growing phase? Do you want to sort of offset income? There's so many circumstances that we want to take a look at what you think you're going to be at and how much tax you want to pay.
No, it
Sorry.
makes sense. No, it makes sense. It's all good. So then when you think about that, right, it's never too late to tax plan, right? We're going to go into Q4 this week and we're going to be closing out the tax year, right? In 90 days or so, something like that, right?
Most people, and 99% of our taxpayers are on what's called a calendar year tax basis, which means that it ends December 31st. Some people have odd year ends, but yes, so for most people, we're going into the fourth quarter, and this is the time to be looking at, are we at a loss? Do we need to maybe push off some expenses that we can push up to the final year, because I don't need any more of a loss this year. I want that expense to be on next year's tax return. So it's things that we can look at. Do you need to get rid of cash? Do you need to save cash?
Gotcha. There's a lot
There's
of
a
different
lot of things to
aspects.
look at.
Yeah, that makes sense. That makes sense. And then, but going back to the CARES Act, you and I had a conversation a few months ago about this depreciation as well. There was a thing about where if you had accumulate or not bonused out all of your depreciation and depreciated your assets down all the way, there was some kind of new mechanism in this omnibus legislation that came out with COVID. Could you help us to better understand a little bit of that? Because
Sure.
just before we hop into that, as a cannabis business owner, you probably have a lot of capital expenditures. You're building out grows and the spaces for these things. This is something you really, really need to pay attention to, because you hear these called tax loopholes, but these are tax laws, right? These are real laws. It's not illegal to do this. It's just having someone on the inside or that knows the law to implement this strategy for you. So if you could help us to add a little color and context to what this bonus
Sure.
depreciation is.
So just for anybody who doesn't understand depreciation, it's not a free line item deduction, but it's not one of those deductions or an expense that you can take that you actually write a check. You don't write a check to depreciation every month,
Yeah.
So but it does involve some cash flow issues. It does involve you purchased some asset, either by cash or by credit, lease, whatever it is that you did get that asset. So you did have to outlay money, but then there's a very legal, mechanism in the tax law called depreciation that you are allowed. It's completely wonderful, especially for real estate. You may have purchased a piece of property many, many years ago. The cash flow isn't too horrible on it, but you get this wonderful line item depreciation that reduces the overall income of that particular asset. So when you purchase something, depending on what you purchase, it's sort of different classes. I'm going to keep it simple. So, good rule of thumb is if you can plug it in, it's kind of considered machinery. And that is sort of depreciated over a 5-year period. If you buy furniture, fixtures, anything that's sort of not plugged in, it's depreciated over a 7-year period. And then you can make the choice. Do I want to fully depreciate this asset in 1 year in one fell swoop, or do I want to take it over, a certain amount of years, however amount of years it's allowed? And that's, again, one of those decisions you have to make. Am I going to be making more money in the future? Do I want to take more of a loss this year? So, am I willing to pay more tax next year? So it's just a lot of things you have to consider. There's something called leasehold improvements or tenant improvements. And a lot of our cannabis companies, they may either own a building that they're depreciating, but a lot of these cannabis companies, as you know, they have to have a lot of improvements to the inside to make these rooms perfect for optimum growing purposes. Mm-hmm. And leasehold improvements are depreciated what's called straight line. So, and it's usually about 15 years, or 10, 15 years, depending on what the lease is. And it's a straight line. So, you buy something for $100,000 or you spend $100,000 in leasehold improvements, and that's depreciated very evenly over that period of time. Under the CARES Act, which has never happened before, they're saying that you can take those leasehold improvements, anything that you purchased in either 2019 or 2018, and straight line right off the bat, first year depreciation for those items. And what's happening is that if you had a company or you put a lot of leasehold improvements into service in that year, you could actually go back and amend a prior year tax return and get that money back. You have that giant line item. Now, the only negative to that, if you want to think of it as a negative, is that you don't have the depreciation to offset any income in future years. But you may have received a giant check, for a prior year to help get you through these lean times.
Got you. So it was such that you had to depreciate it evenly over 15 years. Mm-hmm. And now you can do it 100% bonus depreciation in 1 year or 2 years and go claw back some of that taxable
Correct.
or income tax that you've paid into it, right?
Correct.
Got you. So this seems like a good strategy for cannabis business owners because, as startups, most of you that are watching this are probably startups. And I would say startups are something that, they don't not sophisticated in the financial sense of these things. But what you can do is you can go get all that money back and then build up your war chest to go crush your competition, right?
Correct.
As we talked about in our team meeting, the businesses that employ a CPA or an EA or someone who knows or is familiar with the tax law usually ends up, coming out on the other end a little bit better, or significantly better, shall I say, than their counterpart that doesn't employ this stuff or deploy these type of strategies.
It's true. I can't cite any case law or tax law, but it's known that if you have a professional preparer in any capacity on your tax returns, the chance of audit is much less
Gotcha.
than if you do it yourself.
Yeah, that makes sense. I mean, they know that this person or this firm is preparing lots of returns. They've got data on this person. Has this person been audited? Has this preparer's clients been audited? So yeah, because as we talked about audits, how many, like 8 months ago, we talked about kind of like there is how would you say, an algorithm that looks at a lot of data, but there wasn't a lot of data for cannabis businesses. But now that we're hitting the 20-year mark, over 20 years of legalization in California. Yeah, I mean, 1996 is when it opened
Wow.
up in California. So we're 24 years in now.
Mm-hmm.
But for other states, especially Colorado, you're 5, 6, 8 years in, or whatever it's going to be. There's more data points now that strengthens that algorithm so that you really can't cheat your taxes in this area anymore. Not that you should be doing that. They're going to catch up to you, but there's enough statistically significant data to kick off at least a red flag for a fishing expedition on behalf of the IRS into your business.
Well, and interestingly enough, that's one of the line items, or one of the issues that President Trump is having with his taxes in this current audit. When you look at a tax return, it's not a financial statement. So you don't have backup for each and every line item. So that you could have a business and you have income, and then you could have a line item, general and administrative expenses. We don't know what that number is. If I'm looking at a tax return, I don't know what that number is made up of. And in his particular case, what raised some eyebrows that had them look a little bit further is that for some of his businesses for a couple of years, his general administrative expense line item went up 3 times. So in other years it was $100,000, and all of a sudden it went up to $400,000 with no explanation. What is that? Are you running your personal expenses through there? What's happening? So that's what they're looking at as well.
Gotcha. That makes sense. And with the tax return, right? You said it's not a financial statement. You have to. Not have to, but an experienced tax professional would create what we call work papers. And essentially it's their fancy documents to get you to your tax return. Can you tell the audience a little bit more about, work papers and why it's so important to work with a CPA or an EA who knows these types of things? Because when you do an audit, they're going to, look at one line item that's kind of the toe in the door, and they're going to ask for, records to reconstruct how we got to this number. So could you talk a little bit about
that? Sure. Especially with cannabis companies, we're limited to that dreaded 280E. So it's not necessarily as simple as taking somebody's profit and loss statement and just sort of, transferring that to a tax return. There's all kinds of adjustments that we have to make, and a lot of items simply aren't deductible. So when we take all those receipts and all those numbers, and we make these work papers. So if somebody wants to say, hey, what's general administrative, what's in that line item? We can click on that number and we can see, on October 18th, you spent this, and on November 17th, it's this, and it's all of these things that are allowed. And that's what makes up that particular line item. So it's very important to be organized, but it's also nice if you're a layman, say I died and somebody gets audited. Horrible case scenario. Everything about that was awful.
Yeah.
But they could actually take those work papers and, maybe even and I'm not disparaging secretaries, but even like say a secretary could pick it up and say, oh, that line item is this, and this, here's your backup.
Got you. Anybody without any context of the situation can just dive
Correct.
right in,
Yeah,
peel back the layers of the onion and say, this is how we got to that
correct.
number.
Hmm.
Got you. And that's the value of having a CPA or an EA prepare your taxes, because when you're creating those work papers, you're interpreting the tax law for the benefit of the client to put them in the best tax position possible with reasonable methodologies. You're not just willy-nilly like, oh, we'll just throw 10% of this and 18% of that. It's not like
No, unfortunately, it's not that simple.
no, there's some real thought behind it. There's
Right.
methodologies behind these. These are, proven tax strategies that have been upheld by tax court decisions. We've had to change strategies over the years, I'm sure. I'm not privy to, any particular client scenario, but I'm sure that there's been changes in the way that implement certain type of strategies. So
Correct. And tax law is always changing. There's been some tax court rulings that have scared us a little bit. So, we've sort of taken a way that we've done something and maybe changed it a little bit to sort of fit into that new tax narrative.
gotcha. And also, like, as the client, I'm sure the client has some say, right? Do they want to be extremely conservative or do they want to be extremely aggressive? How does the client play into developing their tax planning or their tax filing, or do they have no say whatsoever?
No, they do have a say. I mean, we do have clients who are like, under no circumstances do I want to get audited, and so we play it really, really safe because they want to play it really, really safe. And even things that we'll say, you can claim this, you spent money on this and this is going to be allowable. And we're, really sure that we could win if we went to tax court. Nope. I don't even want to chance it, and there are a lot of clients who are like, I want you to go as far as you can go. I'm willing to pay any tax if I get audited. I'm willing, able, and ready. So it's always a mixture.
That makes sense. That makes sense. So yeah, kind of having a team of whatever your internal C-suite team is, plus the green growth team.
Right.
You guys collaborate to get to that tax position that they feel comfortable with as a client, and you feel comfortable with as a preparer. It's a joint effort to get to that final
Thankful,
number.
yes, and thankfully we've never been asked to do anything that we have never been. We've just flat out refused to do. That we're not comfortable with. We don't feel like this could stand up in court. We've never been asked to do anything like that.
That's good. I mean, as much as clients are vetting us, we vet clients too. You don't want to take on a high
Yeah.
risk type of thing just to get the preparation fee. The risk and reward doesn't seem the greatest there. So that makes
Correct.
sense.
Mm-hmm.
So final thoughts here. What are some things that cannabis business owners should know about tax planning and taxes? It's not the sexiest subject. It's no fun. Everybody kind of
Not
fears that
sexy.
day of April 15th or March 15th. What should they be thinking about with tax planning? Is it just a one-time thing? Give me some more thoughts on that if you could.
Well, that's a good question, actually. I think that your situation is constantly changing. In February, when I was having Valentine's Day dinner, I could have never imagined that my life would be turned so upside down a month later. And I think everybody is in the same boat. So everybody's life and their income and their job changes, and it's fluid throughout the year. So we're here every single day. So we're not just going to be here for you. You don't just pay for a tax return and then we'll see you next year. If you have a question, use us. We're here all the time. This is what we do. We're constantly looking at tax law. I mean, it's been very interesting, especially in this particular year, all the different tax law that's come out. And we've been able to go back to our client and say, hey, you spent $2 million in leasehold improvements, right? Let's go back and get some of that money back. So we're here all the time. Use us, ask questions. That's what we're here for.
That's it. More than just a 1 week service. This is lean into us. If you are a cannabis business owner and you want a teammate that's always on your team, consider reaching out to Green Growth CPAs. We've got tax deadlines coming up here, October 15th with that single member LLCs, C Corps, and personal income taxes here. That's coming up. So, reach out to us, visit our website at greengrowthcpas.com. In the top right corner, you're going to see a Get Started button. Click on that, fill out the form, schedule a time to speak with our team, and let's get this moving for you. You can plan for the rest of the year, get 2019 tied up, then we'll plan on how we want to get the end of 2020 to end up. Because once it turns January 1st, you're pretty much SOL. We can't go back and change numbers. So be thoughtful. Don't wait till the last minute. I know it's not a fun thing.
Now's the time to do it.
Now is the time to do it. Now is the time to think and be strategic about your financial moves for the coming year. Because again, when you get more money back in your taxes, or you don't have to pay as much taxes, your war chest is bigger. You can go and either buy up your competition or spend more money on marketing to really juice up your business and juice up those returns. So again, visit our website, greengrowcpas.com, or give us a call at 800-674-9050. Natalie, thank you very much for your time today.
Thank
I
you,
really,
Jim.
really appreciate it.
You're welcome.